This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, July 27th, 2016. Euro dollar. So the euro remains pressured to the downside with any rallies very well capped, and it seems the market is now gravitating towards next key support at 109.12, which is the low from the 24th of June. A break below will then expose more medium-term support further down at 108.23, which is the low from the 10th of March. At this point, any rally should continue to be very well capped, with only a break back above 111.87, that high that we saw back on the 5th of July, to compromise the bearish outlook. Sterling dollar. So cable has been locked in a consolidation since basing out by those plus 30-year lows the other week, down just under 128, and the market is expected to continue to consolidate ahead of what should be the next drop below those 128 area lows and down towards next key psychological barriers at 125. At this point, there is room for rallies, but again, rallies should be corrective, and ultimately only a break back above 138 would really compromise the intense bearish outlook for sterling dollar. Dollar yen. So dollar yen is now showing good signs of a potential for a lower top at 107.49, that high that we saw last week, ahead of the next downside extension back towards those yearly lows and multi-month lows at 98.99 from the 24th of June. At this point, only back above 107.49 would compromise that outlook. Euro Swiss. So Euro Swiss continues to be very well supported on dips down towards 108, with the market looking poised for a resumption of gains back towards the range highs, which come in around the 111.30 area. At this point, though, any rallies have been on a short-term basis capped towards the 109.50 area, and we need to establish back above that level to suggest a breakout back towards the range highs. Until then, just some more tight, choppy consolidation, with dips continuing to be supported down towards 108 and rallies well capped towards 109.50. Aussie dollar. So Aussie has seen a bit of consolidation off recent setbacks, though it does look like the market wants to put in a lower top around 76.77 ahead of the next downside extension towards next key medium-term support at 71.45. Really, only a break back above 76.77 would compromise this bearish outlook. Dollar CAD. So a major break for dollar CAD on Monday, with the market taking out critical resistance at 131.89. The break above 131.89 now opens the door for the next upside extension in this market towards the 135 to 140 area. At this point, any setback should be very well supported, with only a break back below support around 28.60 to delay this constructive outlook for dollar CAD. Kiwi dollar. So Kiwi continues to trade with a bearish tone after topping out from 2016 highs at 73.25, and as such, look for any rallies to continue to be very well capped now towards 72, ahead of an establishment back below recent support at 69.63, taking it down towards next medium-term support at 66.75. SPX 500. So the S&P 500 is consolidating just off recent record highs at 21.79, though it does look like the market's starting to get a little bit of exhausted. But whether or not we trade up still to 2200, those psychological barriers before rolling back over, is still in question, and the pressure certainly remains on the top side while we hold above 2150 on a close basis. At this point, it would take a close back below 2150 to alleviate immediate topside pressures.